Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A counter-to-the-counter bullish thrusting pattern on Friday after the previous session's immediate countering bearish opening Black Mariposa and possible day 2 in a 2-day bearish separating lines pattern. The top side was capped on a closing basis by the declining medium moving average, which is currently at 64.07, and more fully by the May and August 2021 lows at 64.58. Further overhead, we have the newly drawn late July to date downtrend currently at 65.35, and the combination of December 2021 low at 65.66 and the flatlining gold long moving average currently at 65.75. Meanwhile below, we have the 38.2% Fibonacci line, the April 21 to March 22 move at 63.02, and the slowly declining green short medium moving average, which is currently at 62.68. Actually, that's an entrance way to some December 25 and early January this year congestion that stretches down all the way to a stronger piece of congestion between 60.02 and 60.64. Overall, there is an argument to look at the overhead downtrend as the upper part of a May 25 to date bear channel, which is currently 56.94 to 65.35. I'm not wholly on board with this argument, though I can see what the motivation may be. The lower bear channel line is made from the extension to the upper trend line of a short-lived but significant May 25 base descending triangle and bullish halfway hesitation. Now so far today, a lower open with a reactionary move back up to just short of the May and August 2021 lows before a renewed move lower towards the 38.2% Fibonacci line at 63.02, though we haven't breached it as yet. Spot gold. A hanging man pattern on Friday after the previous session's indecisive doji cross. This culminated a week of the market testing the overhead 50% projected Fibonacci line at 46.30 and breaching it, but not closing over it. Overall, the market remains within the dark blue mid-September to late October bullish shift pitchfork, just underneath the dark blue middle time, which is currently at 47.05. Looking above, beyond the middle time, we have the 61.8% projected Fibonacci line at 46.89, and then the 100% projected Fibonacci line at 48.78, plus randophobia at 4700 and 4800. Just for information, 46.89 is a Gann number, and the nearest compound Gann number is at 46.98. Now so far today, a gapping move higher up to that 61.8% projected Fibonacci line, but backing off once reaching it, though still with a gapping move higher at the moment. Bitcoin. A bearish closing Black Mariposa on Sunday and second bearish Black Crow after the previous session's small bearish open and close Black Mariposa on Saturday. The market significantly closed back below the green short medium moving average, which is currently at 94.586, and perhaps more significantly below the 61.8% Fibonacci line of the April to October 25 move at 94.212. Now this 61.8% Fibonacci line had been a cap on rises during December last year and early this year, so it'll be interesting to see how it develops. On top of this, we have seen an early December 2025 to date bullish cup with handle pattern, with the early to mid-January action being the handle, until prices fail to clear over the purple November 24 to February 25 double top neckline, which is currently at 97.212, and that was early last week. Now this may just be a temporary setback, but I would pay a special attention to that purple neckline extension. On the downside, Look to the bright red neckline extension currently at 87,683, and that's at the August to October reverse head and shoulders bottom, as a key support, especially on a consecutive closing basis. Further down is the 38.2% Fibonacci line of November 22 to October 25 move at 83,987. In many ways, this is starting to look like the Alamo on a consecutive closing basis for bulls on any attempts lower. So far today, a dip below the lesser Fibonacci line at 92,735, but a pullback up and looking like a possible hammer pattern right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.